So we had Diamond Offshore, which is one of the big offshore drillers. These are all penny stocks now, Noble and Offshore and Transocean, declaring bankruptcy. This is Diamond Offshore, DO, today. And so we see some of these small cap energy stocks affected here, including one, Jason, that you run, Invesco Small Cap Energy. That's PSCE. It's down about 4%. This is a market cap weighted index of small cap energy stocks. We also see XES, which is the Spider oil and gas equipment one. That's an equal weight index. It's down at this point. I know that there's not a lot of money left in any of these, that they're essentially small caps. But did you see any interest in people, Jason, coming in and playing this like we had recently, for example, with the oil ETF? Any more new creations or redemptions here in any of these?
Well, we haven't seen a lot of flows on the small cap side. Obviously, those are the firms that are typically the most at risk of insolvency or bankruptcy in this environment. So for clients who are looking for ways to play the rebound in energy prices through an equity and energy equity, we've been recommending larger cap exposure for those companies that have the balance sheet to weather the storm, but will still benefit from higher prices down the road.
Yeah. Can you have any particular?
So just to add on to that, Tom. I mean, you've got a lot of situations where balance sheets are in tough shape. However, there are some smaller cap companies that actually have they're in better shape. I think when we do see things turn, and that's what a lot of investors are looking for. They're looking for hope down the road, and when things do turn, smaller companies are actually more nimble. They can ramp up more quickly, and right now they're closing down more quickly, hopefully saving as much cost as possible.
I think he's right. I think the key with the smaller cap, the key with the smaller cap names is to be diversified, right? He's absolutely correct that when the turnaround or the bottoming occurs, those names that survive will be very well poised and to profit handsomely. Yeah. And from a total return standpoint, obviously the upside is bigger than in the large cap names.
But that's the big.
Jason,
Bob. Sorry, that's the big challenge.
Jason,
Go ahead. I'm sorry, Bob.
Go ahead, Todd.
I was going to say that the leverage for some of these small cap companies, I think we really have seen driven home with the bankruptcy of Diamond Offshore. If you look at some of the more market cap weighted oriented products in exploration and production, like IEO, which is heavily weighted towards ConocoPhillips and EOG Resources, those are companies that have much stronger balance sheets that are likely to survive the volatility that we're seeing within the oil markets than these smaller companies.
Yeah. Jason, before we moved on from energy here, we spent a lot of time on this. The big question last week I got from investors, and I tried to explain it. Maybe you could take a stab at this. Explain why the price of futures contracts could go negative, but the price of the ETF futures can't go negative. They won't go negative. Can you explain that?
Yeah. Right. The ETF shares, there are several safeguards in place. So from a regulatory standpoint, we, as the sponsors of, have fiduciary responsibilities as a sponsor of the ETF. And so whether it's segregation of assets and collateral, leverage, all these types of regulatory protections that have been put in place to prevent the NAV of the ETF from printing below zero. So the fund managers will deviate from the index methodology if they believe that the fund is at material risk of falling below zero from a NAV value standpoint. The second is that the stock exchanges are not set up currently to process negative equity trading. So on the stock exchange side, what you would see is the ETF trading would be halted before the fund hits zero and would probably be delisted thereafter.
Yeah, that's my explanation. I've never seen that happen. They'll just, even at the NYSE, you go below $5, you start getting letters, and they'll delist you. So the basically forced liquidation, essentially, or at least a delisting will do it.